Hi, I'm Jimmy. So, since the start of 2020, the stock market is down a bit more than 25%. And meanwhile, gold is up slightly more than 5% over the very same time period. This means that if we invested in both stocks and gold, starting at the end of last year or the beginning of this year, well, that would mean that we would be doing better today thanks to our gold investments. Now, our question is, do we think gold will continue to move higher, let's say over the next year or two? And what does history show us? Sure, there hasn't been anything quite like this pandemic, but there have been other stock market crashes that we can go back and analyze to see how long gold continued to run for since, let's say, the bottom of the crash. After all, gold is known to be a fairly reliable hedge for stock market crashes. But what about post-crash? Okay, now before we jump in and look at the history of gold, let's look quickly at some things that have happened more recently that have caused a fair amount of volatility in the price of gold. So we can see that the S&P 500 peaked right about there. They're the blue lines. And the gold took a nosedive shortly after the S&P started falling. And obviously, it's tough to tell what exactly caused something to fall. But overall, from what I've gathered, there were at least some investors who did in fact invest in both stocks and in gold. When they got in is somewhat irrelevant. But either way, as stocks started to fall, well, many investors needed cash. Maybe they got margin calls, or they just needed to raise additional cash, or whatever the situation was. Either way, many investors were forced to sell their gold investments to raise additional cash. And just like that, we see a huge drop in gold in a fairly quick manner. Now, gold does remain one of the more reliable safety nets out there. And gold gives off the perception of being a very safe investment. So once the price drops, many investors turn around and they jump right back in, once again driving the price higher. And we can see that what we end up with is a fairly volatile market, at least in the gold market. We know the stock market's been very volatile as well. Now, this volatility is obvious. It's more obvious when we're zoomed in like this. But I think that if we were to take a bigger picture look at the gold market, well, we might come away with what are some of the underlying influences of the price of gold. And then perhaps we can ignore some of the short-term volatility when we stick with the big picture. And I think that makes the most sense as long-term investors. So now, when we look at this gold chart, this one goes all the way back to 2004. Well, now we can see that right around this time period is when the Great Recession happened. And we might also be interested to note that during that time period, we can see, even when we're this zoomed out, that there was a fair amount of volatility in the gold market. We could see there was a dip while the stock market was crashing. There was, in fact, a dip in the price of gold. And knowing what we know about investors, at least sometimes selling their gold investments to cover any margin calls or cover any expenses or simply to take profits, well, we know that the selling of the gold can increase the volatility of the gold, at least over the short term, making the price look a bit all over the place. At least during the crisis itself, that's the way it seems to happen. That was true both back in the Great Recession and in the current stock market. But when we look at what happened to the price of gold in the years that followed the Great Recession, well, we can see that was a serious move higher. And if we think about this fundamental move higher, it's actually quite logical when we think about some of the underlying factors that drive the price of gold either higher or lower. So we know, even based on just what we've seen so far, that ultimately it will be supply and demand that will drive the price of gold. But when I say supply and demand, I think that it's important that we recognize that we're talking about the supply and demand from an investing standpoint. Since there's very little functional use for gold. Sure, there's jewelry and there's some use of gold in electronics, but there's nowhere near the functional use of something like copper or iron ore. Yet the value of gold remains quite high thanks to the supply and demand on investors' side. Now, another factor that influences the value of gold is interest rates. So just to illustrate real quick, this red line, this is a chart of the Fed funds rate over the very same time period. And as we can see, as interest rates went lower, well, gold went higher. And as they stayed low, well, gold stayed high. But now you may be asking the very same question that I asked. If this is true, then why did gold begin to fall as interest rates stayed at zero? And for that, there's actually a couple of answers. First, clearly this isn't a perfect relationship. But while broadly speaking, yes, this appears to be true, it's actually the wrong relationship to be looking at directly. The way it actually works is that lower interest rates should lead to a lower dollar, and a lower dollar leads to a higher price of gold. And this logically could make sense since gold is often denominated in US dollars. So as the US dollar falls, gold becomes more valuable around the world. So in theory, when we overlay the US dollar, and for the US dollar, I'm using DXY. DXY is a US dollar-based index. It's the dollar versus a few other world-leading currencies. Either way, when we can see that when gold prices fell, well, the dollar was rising. When the dollar was weakening, well, gold was doing better. Now, clearly, when we look at just the past couple of years, well, the dollar has done a bit better and gold has moved a bit higher. And I think this brings us back to the supply and demand side of investing in general. As investors have grown more wary of a possible crash in the stock market, well, more people, I believe, have hedged their portfolio with gold, and broadly speaking, gold has moved higher because you've gotten more investors in it, despite the fact that we've seen a slightly stronger dollar. Now, before we clean this up a bit, what do we think is going to happen now? Well, the reason I brought up the interest rate side of this whole equation is that they're one of the key drivers to the value of the dollar. Hence the reason we saw that there was some relationship between gold and interest rates. Sure, the dollar is sort of the middleman in between there. But now if we would eliminate interest rates from this chart, and now we're left with just the dollar and gold. And there are lots of factors affecting the US dollar in general. There are other currencies and other interest rates in those countries. But when we look at just the price of gold, well, once again, we can consider that from the Great Recession, from the bottom of the Great Recession, gold went on a multi-year run. And we know that that's at least partially due to the fact that interest rates were quite low for a long time after the Great Recession. Well, now our question is, do we think this will happen again? And personally, I'm inclined to think that this will happen again. I don't think that the Fed is going to turn around and change the course of interest rates anytime soon. Unemployment is going to spike. And we know that we also know that the Fed is out there printing money. These are all indicators that should point to a higher price for gold. Now, over the long run, we know that that could be true. How high will it go? I don't know. Maybe it gets to the old high of the Great Recession, of the post-Great Recession. Now, personally, I do think that gold has a strong likelihood of moving higher over the next couple of years. Now, if we're looking for other ways to hedge our portfolio, I actually did a video back in 2018 where I talked about how to hedge your portfolio. Sure, it's been a while since I first published that video, but fundamentally, it's just as true today as it was back then. So if you're curious, that could be a good next video for you to watch. There's a link right here. There's a link in the description below. And I want to thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you. I'll see you in the next video.